month. The market's clustered at 15, but they could go 0 or 50.
Looks like we'll find out the answer when it comes to whether the RBA will go and move today or not in just a few seconds' time. Really comes down to 15 basis points is the current forecast around both the markets and where most forecasts are clustered. But of course, there is a risk that we might get something of a 0 or even a 40 basis point hike, depending. Also looking out for commentary on what the RBA tends to do with its balance sheet. Also, its forecast will be in focus. It will go and give some assertions to what's likely to be found in the upcoming SOMP. When it comes to the decision, the board has decided to increase the cash target rate by 25 basis points to 35 basis points. So in between, which is a bit of a shock in itself. So the cash rate is now set at 35 basis points. Remember, markets were clustered around that 25 basis point. That has absolutely sent a rocket under the Aussie dollar. It was up about 0.6% to begin with. It's now trading up 1% at 71.13. The RBA has said that it's committed to doing what is necessary to ensure that inflation in Australia returns to target over time. Very different slants to what was said only just a few months ago.
Yeah, I've just got the statement in front of me from 3 months ago, because that was the last time they did this forecasting round. And it seems like this time around they've got good growth for GDP. Of course, we needed that. They have mentioned that inflation was higher than expected. But the central forecast for this year is now underlying inflation of 4.75%. Scuddy, that is a 4 handle for underlying inflation for this year. That is certainly quite the upgrade.
It is the upgrade, and there's going to be action as well when it comes to its task to go and bring inflation back to within that target. It is saying that a further lift in interest rates over the period ahead will be required. So that's all you need to know. As the markets have already been speculating for quite some period of time, there will be more than just one rate increase in this cycle.
And it's an interesting one, isn't it? Because whether you were 0 or a rate hike, Scuddy, absolutely nobody thought they would just do the 25 basis points straight up. We thought there would be some sort of technical adjustment. Does it really matter in the scheme of things, though?
I don't know, I don't think so. The 35 basis points, it doesn't really roll off the tongue, but nor did 10 basis points, to be honest.
Yeah.
And only because we're used to doing it in the past, it was 25 basis points and used to be in 25 and sometimes occasionally 50 basis points in an increment. So maybe not too strange. We might get some clarity as to why that was done, but certainly has surprised the market. Something for everyone, though, both the more neutral and the more hawkish amongst us.
It sure is. Now, we've got ourselves a guest host in the studio. We've got Marty Wetton. We'll give you a bit of time to actually digest the statement, but just in terms of that headline, Marty, from CBA, are you surprised to see that 25?
25, definitely, as everyone said. No one had put that one up as a possibility. I think it's really because when the Bank of England went from their 10 basis point, they went to 15 to begin with, so they got the 25, which allows them to have the corridor system. But I note that the RBA is going to keep the, as expected, exchange settlement balance level at 10 basis points under, so 25 basis points they'll pay on ES balances. I note at the end of the statement, of course, what we had originally discussed that I'd be on for was they are going to be, they have discussed their bond maturities and what they're planning to do. We'd always thought they wouldn't reinvest coupons, that would go back to the government. We did for the longer period of time think that they would actually reinvest their maturities. However, as they say, given the progress towards full employment evident on prices and wages, what they're going to do there is not reinvest. However, that's a 2023-24 story. It coincides with the term funding facility coming to an end over those periods. So not a big deal for the moment, but it's obviously something that the market will need to consider with bond supply over the next couple of years.
There's also